Thursday, March 16th, market analysis, Stan Ehrlich. Good morning. 9:53 California time, and we always start out with the stock market indexes and the spider in particular. Well. We have new highs today for the previous 5 trading days, and highly likely, but not guaranteed, a higher close than the last 5 days. So actually, it's a higher high than the last 4 days and a new high close the last 5 days. Secondly, and that is a minor upside breakout. Secondly, we're starting to chew our way into a resistance area, which is only 2 or 3 weeks old. It is basically the process of this last significant decline, starting in early January. It was actually February 2nd, 6 weeks ago, when we got overbought and challenged a major resistance area. And you can contact me at info@ersignals.com. So on the 10-minute chart on the left, just so I can get enough historical data on one screen here, this size, we're bouncing, but through it, the beginning of the resistance, the lows that were made February 24, 23, March 2nd, that is, and March 1st. I'm sorry. There we go. That's good. We've already attacked that twice after getting below it. This time, we're getting into it and have some follow through all morning long, essentially, since we opened, and we were down 3 points to begin with this morning. And now we're up 5.5 points. That's an 8.5 point swing. That's pretty decent for a day. We're only halfway through the day. We're pushing. It's not stopping yet. Even overbought conditions on a short-term basis are not affecting it any significant amount. Minor little 10, 20, 30-minute declines. No big deal. Then you get a new high. If that persists, then we could have some really whopping big buy signals. Now, that's great for the S&P, kind of proving what I've been saying for a few days, expecting to see a rally. And when you see a new high and a new high close for 5 days, hey, it's also completely above the 2, and depending upon which index you look at, 3, 4, or 5 oversold days. For the spider, we're well above the high of the 2 oversold days. So that oversold condition is starting to prove to be correct. Let's go. Another comment. We're now above the 200-day Dow Theorist long-term investor moving average, which I hardly ever talk about historically, but lately it's becoming important. And I mean, in the last 2 or 3 weeks, we're above it, we're below it, we bounced off back and forth. So now we want to get above it, and we are, and stay there. We'll see if it does. And it's flat. That moving average has now turned flat after being down for a whole year during the bear market of 2022. That is a long-term potential indicator. Again, I don't like moving averages in general. They have their purpose, but not the way they're normally used by most people. Okay, we're also above some major bear trend lines and some other lines that have been very important. We have overhead resistance, very true. But this was the most oversold. We just came up from only 3 or 4 days ago, the most oversold we've been since September 28th. Remember, this market bottomed out dramatically on October 13th with a bullish ER engulfing buy signal turned green as green can get on October 13th, and we went up all the way until December 12th, had a correction. I thought that was a significant turning point from the standpoint of a particular pattern, but that does not seem to be the case. And I've got a little alarm going off on corn. So if it doesn't go away real quick, I'm going to go to corn real quick and kill this. Oh, that's not corn. Wait a second. That's OJ. Ah, there it is. Okay, resistance, edit the trend line, and should be a teaching class on TradeStation. Remove all the evidence, so to speak, but not the line. Going back, sorry about that. Let's look at the stock market indexes, some of the others. And Good things to say about the S&P 500, exclamation point. So on the daily chart, again, a little bit different picture. We have a revival of the up move, at least on a minimum short-term basis. I am fully expecting that probably next week we'll be up to 408 to close that gap. If and when we get there, and I think we're going to, imagine what the chart's going to look like. You're going to start making new highs in a few days from February 16th. So that's going to be way over a month. So today is exactly 1 month. So it's going to be 5, maybe 6 weeks of price range below us if we get back up to that 408. And I'm still getting another alarm on soybean oil. Gosh darn, I should have considered this. Well, I'm going to skip it. Hopefully it won't keep us. I'm sorry. 1 second, please, people. Bean oil and right here and resistance and get rid of the alert. Sorry about that. Normally this doesn't happen. Back to our index. Okay. Bottom line, looking damn good. Oversold condition worked. Sorry we didn't get a bullish engulfing in the SPY. We had the DIA having new lows for the whole move down here for a couple months and oversold for 4 days in a row, not just 2 like the spider. Now coming up pretty darn decently, and a little bit more strength is going to make a new high for 4 days, previous 3 days. And a little bit more than that will be new highs for 4 days, just like the spider's already done. So it could still do it easily today. It did bottom out in a support area. I had this green line at 314-ish for a long time before yesterday. I like what we're looking at. It puts a spark back into the bull trend, but there's more to go. Explanation point. This is just the beginning, I think. I expect. The QQQ. Now, it has done the best. It has had a great formation that is working. There's nothing wrong with the head and shoulder bottom and the Qs. We had the shoulder just like in the other indexes, but they failed to hold the pattern rules. The Qs have behaved properly. First shoulder was June. October 13th is the head of the formation. Last shoulder low occurred a little bit sooner than I was expecting, which was January, occurred in late February, December, excuse me. And it occurred a little lower than I would have expected, but still in an area of support. It happened to be the bottom of it instead of the top of it. Anyway, that's the last body part. The last shoulder went up, broke the neckline, which is almost exactly the same as the major bear trend line for the bear market of 2022. That was broken, tested a couple of days later, and up you went. In fact, at that point, a breakout of a head and shoulder bottom allows you to forecast the minimum upside objective, which I have done a long time ago. In fact, on that date, I'm sure I did, January 20th. And that objective is 346.80 minimum. We already went approximately 50% up to that objective with a high made on February 2nd, just like the other indexes, pulled back. Now, we did have a bullish engulfing 3 days ago, and we had another bullish engulfing yesterday. I talked about both of those the day they happened. The only bummer, so to speak, is we didn't quite get low enough on the RSI, which did get down to 28.13. I like 25 or lower in order to turn the daily price action green and be an official ER buy signal, which would have been, of course, the exact low day of the break. And that was March 13th. A bullish engulfing, yes, but not an official signal because of the oversold condition wasn't quite what I like. October 13th was dead perfect. Great. If I wrote a textbook on this stuff, that would go into the textbook as the classic example, October 13th. This was damn close. Plus the fact that we got another bullish engulfing yesterday in the Qs. And look at this. We are now at new highs in the Qs for 1 full month. It was February 16th, and this is March 16th, that we were at this price level. And ever since February 16th, we were below this price level. So it went through some resistance levels. And you know, we don't really have that far to go. just a little bit above 1380, for example, 313.80, and we're 1305 right now. 1305.80. So 6, 7, 8 points higher, up 6 point something right now. So I'm not saying it's going to happen today, but hey, we already did 6 points at the moment. It could be as soon as next week. I wouldn't be surprised that we make new highs in the Qs ever since a long time ago, August 22nd, 22. That is what you define a bull trend: higher highs over time and higher lows over time. So the Qs are going up the quickest, the best, the fastest, and holding the gains the best period of the DIA and the spider. Momentarily, the DIA is doing the worst and the spider's caught in the middle. I do want to talk about one other index I don't talk about every day. It's very important. It is the Russell 2000. Today's low is a little bit higher than yesterday's low, which is important. It's a tiny bit lower than 2 days earlier. So for the last 3 out of 4 days, you've got lows that are about the same, and they are right smack dab in the price range of the lows of December, as well as last May. They're very close to those levels last May. May, you oversold. December, oversold. Last 5 trading days, 6 actually, in the 2000, oversold. There are 2 other occasions which created a double bottom formation, and that was the June lows, which is the first shoulder on the other patterns, and the October 15th bullish key reversal that very unfortunately didn't quite get oversold enough to turn it green like the other indexes, but close, very close. So huge support, long-term, bouncing off of in an oversold condition again. We need to get higher quicker, faster. There's a gap to close at 180 up to resistance. And I think enough momentum in the next week or 2 will be built to start to go through this resistance area. And the whole long-term key is to reach basically 200. That would be fantastic. And I do think in the next 2 or 3 weeks, I'm adding a little more time. It may happen in the 2000. Okay, futures. I know you've been waiting. We have the OJ. Pennant formation. Keep an eye on this thing. You got to break out sooner or later. Probably upwards, because pennants are usually continuation formations. Not always. Next chart. We got soybean oil, been setting off that little alarm at this resistance level. We could be at the high of the rally. This is the very beginning of a little resistance. I wouldn't be surprised if it would work its way up to 59 in small numbers. We're 57.5 right now. So maybe a little bit more, but I would be looking for short sale signals, reasons to sell short. This market is a long-term downtrend that is persisting. Next. Basically the same kind of comments here for corn. Broke down, new lows the last couple of weeks. I followed this every day since it started to get close to that support level. This is a good area to consider selling short right here, right now. 635 and fraction. Now it might get up to 648. Somewhere between here and 48, I think, is probably going to be the turning point down, and I wouldn't be a darn bit surprised if it was here. Next, natural gas. We did pick the bottom of the move, February 22. It's had a couple of week downside modest retracement, no big decline, and it looks like it's going to start making new highs soon. I like it, not a heck of a lot. I'd like to see a little more follow through here and new highs for a week, week and a half. Then we're probably going to jump through 3.1 and higher. Next chart. Heating oil. Breaking down 2 days now, at least at the lows, below a support level that's significant. I think we're about to close below that green line, and that's at 257 and change. The low today is well below that and lower than yesterday's low, and a new low as far as lows go since early October. I just at the moment doesn't want to stay down. It is oversold today. I don't care. It could bounce up a little bit more, but soon. Say next 1 week, maybe 2, but soon. We should be closing below today's lows. Next chart. We got crude oil has already done that kind of thing, and it was yesterday. We did break down. We broke support. It stayed down. It closed below this little red zone, which used to be support. Now it's red, it's resistance. Green is kind of like support. And green means buy, red means sell. And a little rally starting today. No surprise, oversold for 2 previous days. I'm looking to go short in a ballpark of 71 something, 71 and a half. We caught the bottom of the move here in silver and platinum and gold. So 4 or 5 days ago, we had a bullish green engulfing oversold conditions, and bingo, straight up, couple of days, sideways a couple of days. We're close to being overbought, not quite. It could dip down slightly, but not too much, and then make a new high soon, very soon. I'm kind of expecting at least 23, maybe 23 and a half minimum upside swing here. And boy, oh boy, it would be great if it can actually make new highs above 25. You got a long-term bull trend perpetuating itself. That would not be out of the question. Next one is platinum. Caught the bottom of the move in platinum to the exact day. That is what the ER signals are built for. Green is buy, red is sell, and there's your red smack dab on top of that rally. And green almost at the bottom there, red almost at the top there, red at the top there, and red almost at the top there. Come on. Next chart. Green at the bottom, gold. Caught the bottom of the move. Remember, every time you see green, you know the ER1 technique is in the trade. If you see red, you know ER1 new short is in the trade. Now, ER3 likes a little retracement in order to get in the trade, and frequently we get in, sometimes we miss. But at least ER1 is in for sure. Next chart. Overbought, bumping against a little resistance, and this is important. This is bonds. This chart goes up, rates go down. Rates going down, the market tends to like, indexes should go up, which brings me to a quick check here. Okay, almost high and last, but dipping back just a little bit, no big deal. So bonds are now lower on the day, some, after making a new high, but they banged against the resistance, and they're overbought. We're starting a minor downside correction in the interest rate futures, 10-year notes and bonds, probably. Minor. I don't think we're going to go down quite as low as 125. The last time down, we were actually down to 122-ish. I'm thinking the downside in this particular case is likely to be in the 127 area. And we're 30 seconds at the moment. High 130. Yep, that's what I think is going to happen. So soon, I'm expecting it to break up above this red resistance level, which is at a top of 134 and a half. Once we close above 134 and a half, we should have a very nice big rally. And I'll bet you the Fed will be talking about, and here comes some fundamentals that I'm not good at. I'm not a fundamentalist or fundamentalist. Probably the Fed's going to give all kinds of hints that they're through raising rates, at least at a minimum, and maybe even dropping at a tick or two or something. Who knows? And that would be maybe a month or 2 or 3 from now. And markets are very anticipatory. Markets, one of my old favorite sayings, markets move on anticipation. That's bullish or bearish. And they reverse on realization. So once the news is out, usually the move up or down, whichever, has happened. And only people that don't understand the market that much get sucked into, oh, we've got bullish news, let's buy it. That's usually a mistake. Next chart, 10-year notes, basically same comments, in a resistance area, overbought, having a little correction at the moment, down on the day some. Next chart, soybeans. Not too much to say, and I think I've probably covered the index futures that I wanted to. The others, not particularly super interesting at the moment. I see live hogs are making new lows for quite a while. Bear market already didn't get any signals lately, unfortunately. And that's going to be it. So back to OJ with the pennant formation. I do want to touch on, because there's some important things happening. The forex markets, euro dollar, testing support yesterday, passed the test even after a few ticks new lows. Big, huge range. Bearish engulfing. Normally bearish. We're having a rally. It is approximately in the middle of yesterday's big bearish engulfing range, which is my ballpark area to go short. I do not have an official red bearish ER signal, but it's a bearish engulfing and a big one. And we've already come back into the middle of the range of yesterday. Again, which is the ballpark. We do have mathematical formulas to figure this stuff out, which we use, but I'm not going to tell you that right now. Sorry, a family recipe. And I wouldn't be surprised if it went down from here. Next one is the dollar index. You should be getting basically the opposite. And we did have a minor bullish upside engulfing yesterday, but it wasn't oversold, so I didn't get a green signal. We have retraced into approximately the middle of yesterday's range coming down. And so around where we are right now, or a hair lower, is the place to be a buyer with a stop below yesterday's low, and off you go. You're going to be right or wrong. We'll see what happens with these things. And the next one is the last one I wanted to show you. Dollar yen had a bearish engulfing yesterday. We did come back up into approximately the middle of the range of yesterday. That is where it is right now. And it closed around that area. We do have an ER1 and an ER3 short position on officially in the dollar yen. We'll see where it goes. This looks like it's going to come down to 128-ish, challenging the lowest lows. And boy, we got the bottom also. Green buy at the bottom of that big bear market, almost the exact low day. And yes, we got the exact high day of a huge bull move and the beginning of a bear market from October of 22 all the way into January of 23. That's how profound these signals can be. I'm now going to touch real quick on sectors because we have today a brand new bullish engulfing in, guess what? The banking sector. The implication is, okay, our little panic about banks is over. Maybe we're going to get a retracement into the middle of today's range, whatever it ends up being in the next few days. Maybe we won't. Maybe it'll just skyrocket from here. That wouldn't be surprising considered how oversold this sucker got. Oh my goodness gracious. Look at that. It came down all the way to 3 something on the RSI. That is amazing oversold condition. You may not see that for years. How many years has it been? I don't know. I'm in the wrong key here. Well, I've got a good number of years loaded in data, and I don't see any example of that oversold condition going back to the summer of 2015. That's how oversold it got. That's classic of a panic, and now we've got a bullish engulfing. I'm screaming bloody murder that the banking sector should be recovering very nicely, and I think I got one more. XLK is not banking. This is Tech Spider. Bottomed out a few days ago at a support level and is almost a new high ground, not quite. Now it's slightly some resistance, but we're not overbought. I think this is about to jump in a new high ground completely and continuation of the bull trend up. We did catch the bottom of this index on the bottom, October 13th. So many buy signals on that date. It was blatantly obvious to me because of what I like to look for, that the market was going to make a huge turn across the board in an innumerable number of issues based on October 13th's one-day price action, period. Go listen to my recordings on that date or the day after, or even the day after would probably be the best. I'm done. Thank you very much for a long one today. Some very unusual special situations happening. See you tomorrow.